Hey there everyone, welcome back to the Indus Trader YouTube channel and welcome you all to the weekly analysis video. So in this video we're going to combine this weekly analysis going to be a little bit of different approach, because as you all seeing daily analysis as well, we are trying to make max use of that. So in this particular video we're going to see about introduction of this, and thereafter we're going to see the low VIX environment on Saturday's market, and as well as we're going to see US S&P 500 all-time high, and especially the focus will be of FOMC minutes and this outcome which is going to come on February 1st, and we're going to discuss about some war issues and possible crude oil issues as well as monetary policy, as I said, and especially at the end of the video we're going to discuss about Nifty and Bank Nifty analysis and intraday levels. And one more thing, in this video we have timestamps, so if you don't like any part of the video you can completely skip, or at least you can increase the speed of the video and you can watch. So without wasting much time, let's get started. Let's start with the FIIs and DIIs activity. So if you see in the cash market, we already discussed in the Saturday's post market analysis video, and clearly you can see that even the number denotes the same. If you see, net sold by FIIs is 546 crores and net sold by DIIs is 719 crores. So if you come to the summary, you can clearly see the positions carried from the pro as well as clients. If you see the pros completely carried bullish side, might be medium and mild, and if you see in index futures they are strong bullish. Apart, if you see FIIs almost mixed data. Rather than you say mix, you can clearly say that in Nifty and Bank Nifty they have carried bearish positions, and only mid cap Nifty it is mild bullish. And coming to clients, you can see even clients carried complete bearish positions. So here only pros are carrying bullish, and apart remaining have carried the bearish positions. We can take this from the FIIs and DIIs analysis. Let's start with the US markets, and if you see, slowing inflation has fueled expectations of rate cut, and the result you can see in the S&P 500, it almost reached the all-time high, and this is after the high break after 2 years. And there are also a lot of things which we need to watch out on this particular breakout or this particular all-time high. If you watch out this, especially chip makers and other tech companies are outperformed, or like you can simply say that these are the reasons behind this particular breakout. And all-time high, especially this high, this coming week especially is important for lot of aspects and lot of central banks as well. We're going to discuss one after each, but especially S&P 500 after this all-time high already results week started. And if you see Netflix results on Tuesday, thereafter followed by Tesla, thereafter followed by 3M and as well as Intel, especially these results gonna to make a impact. So what sort of impact? If you see, especially if the results are not coming up to expectations, then obviously that gonna to be a negative news, and especially this breakout would not sustain until and unless this particular results and IT sector gonna to support. Only then we gonna to see some stability of this all-time high break. And coming to the next news, December personal consumption expenditure data, we already discussed in the previous videos as well, but if we talk a little bit of importance in this video, because there are series of events which are interlinked. By the end of the video even you will understand this. If you see, 2.6% is the last 12 months, that means till November, that is the highest of almost increased 2.6% personal consumption expenditure. But thereafter suddenly you see in the December, it's almost first time after this, first time in last 3.5 years low. This is the data we got. So especially this is also strong, and there are also other aspects which we gonna to discuss is, especially coming to US we are discussing now. So GDP data on Wednesday is also going to be crucial as equal to this monetary policy, because you see the expectations are 2.0 that is 2% after 4.9% increase in the previous quarter. So we're going to also watch this data as important. And coming to, especially if we talk about this particular S&P 500, before that, if you remember, we have shared a level in the US 100 while we are talking about Indian markets. Meanwhile, I have taken the reference of this US 100 and I have also discussed about this level. Now even compared to our markets, this market are looking so good until and unless this level is holding on. And if you see previous videos, you will come to know. So the same thing is happening in here as well. But coming to not only about US market, there are also other things especially related to the banks. European Central Banks holds its first policy meeting of 2024 on, this is also on Thursday. And expectations are, see, there are good number of expectations in the market about European Central Banks, and they are almost expecting 5 rate cuts this year. But suddenly if you see the president of this ECB has already warned this, like we cannot overcome inflation if we go for 5 times rate cut, so make sure you keep expectations in the limit. And similar case with the Bank of Japan is to conclude its latest policy meeting on Tuesday. Market is expecting no change in that, so even we need to also track that. If you are able to tracking all this, then that's going to give you a complete view and you will be staying in the present trend. Meanwhile, the Bank of Canada is widely expected to keep interest rates hold on 5% on Wednesday, and this is the 4th straight meeting. So we need to just see, even if you ignore Bank of Japan and Bank of Canada, it's completely fine, but make sure you track ECB as well as other updates. And coming to another aspect which we need to focus on, coming to oil, if you see, again you need to also keep a track of oil, because yes, Friday it's almost slightly lowered, but if you see especially if you compare weekly, then obviously they have gained almost. If you see, if we are talking about Brent, then it's almost 0.5% raised, and if you talk about US crude, then it almost rose above 1%. So immediately there are also some of the international energy agencies raised global demand forecast, but still there are also other things which are going, like some news, Dhaka attack, and there are also some other newses running on. So the clear indication, see, whenever we are seeing some war environment, it's directly impacts on the crude oil prices. So make sure you also watch out the crude oil rates. So now let's talk about the US 10-year bond yield. If you see US 10-year bond yield, at present it is trading near to 4.1. it's almost went near to 4.2 as well. But yes, as much as it is correcting, then that is positive for our market. So make sure you also keep a watch on particular next week on this as well. Why I am saying this? Simple reason, if you see FOMC minutes, so this is important, just focus on next couple of minutes. If you see FOMC minutes, that gonna to come on 30 and 31, especially if you see February 1st. February 1st is the reaction we will see on the markets. And coming to, if you see, just one day before we have our expiry, monthly expiry, so it's going to be a complete volatile day for 31 and 1st, and especially the people who are planning in advance 1 week advance. I am saying you this, 1st February going to be a very volatile day, and especially if you are carrying positions, overnight positions. So make sure you keep in mind that 1st Feb gonna to be a volatile, and we may see the impact according to the outcome. See, initially market expected the rate cuts in 2024, we all know, but thereafter suddenly the Fed members coming up and speaking about we do not have early rate cuts, and market is prepared now. It's okay completely, like markets are prepared about it's not going to be a rate cut that early, because even if you see the Fed monetary tool, it's clearly indicates that. If you see on the Friday, they are already expected that we do not have any type of rate cuts, at least February, but they are expecting on the March they are expecting the rate cuts. but yes, as I said again, the commentary plays a key role here. So that's the reason, just make sure while carrying the overnight positions, make sure you keep this in the mind. So because the commentary plays a key role, even if you see the commentary of after the HDFC bank, you have clearly seen that how commentary is important. So the commentary plays a key role here, so make sure you keep that. As of now, as I said, market is already prepared for that. We do not have any rate cut, but yes, commentary, if they also throw a stone on the expectations of March, then definitely that's going to affect the market. So you need to keep watching that as well. And monetary tool, you keep watching this, and you can see the expectations. But as of now, we are not going to May. Just watch out the March as well as February. This particular 2 months, especially as of now, I am seeing no expectations in the February, but expectations are there for the March. So we need to check out this as well. Yes guys, till now we have discussed all the major events upcoming in the US market and US market updates we have discussed, and we have also gone through some of the central bank decisions. Now let's go and watch our Nifty and Bank Nifty analysis and my personal trade plan I'm gonna to discuss in next few minutes. Before that, I want to take and discuss about little 1 or 2 stocks which are very important. If you see, especially ICICI Bank overall results, I cannot say completely boosted, but as we discussed in the post market analysis video in the 20 Jan as well, but yes, they are also not that bad. But yes, this gonna to, we need to check out how market gonna to react on this ICICI Bank. So before that, if you see, again we got IDFC banks, completely fine. They are not disappointing results, IDFC. But yes, people, if you see other platforms, they are saying that they are not up to expectation. But what I feel is certainly that are not bad or disappointing results. And yes, not neither it's like a boosting positive or like it's not negative, it's completely fine. I can say one word, it's decent. Now coming to IRFC, if you see, this is IRFC, and you can see the stock almost. I have recently, today itself, I have updated the IRFC market cap photo as well, and you can check out in our Telegram channel. But the main point I am clearly focusing here is, if you see 3 years lock-in period gonna to complete in this particular stock, so there is a possibility like people may exit. See, there is a possibility clearly. You need to just understand here, there is possibility, it's not certain, but there is like there is a complete possibility, like after a lock-in period, one who are not interested or one who are happy with the gains they are getting, they will certainly exit their positions. And coming to government, if you see the shareholding pattern, like promoters have almost 86.36%, but according to SEBI norms, we need to have 75%. So even they need to dilute that, like we need to see how, but they need to also reduce their particular shareholding pattern. So make sure, until and unless you are thinking of long term in this stock, then I personally for myself, I would be not looking at this particular stock, because there is a possibility of little bit of profit booking, or like as I said, lock-in period is gonna to complete. So make sure you also watch out, and yes, before investing you need to consult your financial advisor. And this is little update from the IRFC. So now directly let's jump to our important aspect. Okay, so see why I kept this daily analysis at the end of this course, or end of this particular video. The reason is very simple. If you are linking all the aspects which I am discussing from starting, then you will understand this levels at ease, and even you would have strong logic for all the movements happening. So that's the reason I have planned this at last part of the video. I know till there are very few members who have watched the entire video. Even I know that if I would have explained this in the early part of the video, I would have got more views as well. But yes, here focusing on views or focusing on proper content, I would always look forward, without second option, I would look for the proper sorted content. So yes, that's the reason I have kept here. Hope you will also understand, and let me know the initiative of this particular weekly analysis. How did you like this? At any part of the video, if you like my efforts in this video, so make sure you like the video, subscribe, and make sure you also share your feedback as a comment. So after a regular drill, let's go to the analysis. So if you see, particularly I am not expecting this level. We already discussed in our previous videos as well. So the same level which we have discussed, and particularly in the Saturday video as well, we have discussed that from now we are looking for bottom levels. But if you see, in between we have another levels, 21,493 as well as 21,455. So now I need a daily closing above this, until and unless that we are looking for short positions. And yes, if market, if anything it have a bullishness, then immediately that should go and close above this. If this is not giving intraday based closing, that is daily closing, if we are not getting above these zones, then definitely there is a concern, like it may consolidate here, or like we may see a time correction here. The reason I am gonna to explain here is, if you see recently IT sector also rallied, and especially if we talk about the higher weightage Reliance, you can also, if you see last previous 2-3 videos, you know I have clearly explained why Reliance corrected after the results. Clearly if you see, you can say blue chip stock is moving that sort of return in last 1 year, obviously people will start booking profit. And yes, even Reliance I am expecting some time based correction. So which will result, see, when you have two bigger weightage stocks, HDFC as well as Reliance, then both are in that stage, they are not going to give you the rally, and IT sector already rallied. So obviously we cannot expect big momentum or like a bullish move or closing above these levels without support of these two stocks. That's the only logic I am looking at here, and there are also additional logics of technical analysis. By our advanced technical analysis, we have taken out these levels. So what I am looking at is, at present, if it is coming back again to these zones, then I will book my profit and I will watch over. And if this range is accept, so it is too early to say, but yes, there is also a possibility after coming at these ranges again it is moving back, and so that time we can see at this range. And even I am looking at this range and either side, so this particular range helps option sellers much. So as of now, in between I would love to do positions, and yes, I will not expect bigger targets until and unless it is breaking either these ranges or these ranges. And hopefully, you know, this is a future chart, and please consider it as future, don't see the levels as in spot. Okay, so now coming to bank nifty. So bank nifty, as of now I am sticking with the same levels, because we would change, we will update the levels after seeing how investors are taking ICICI results, and I want to check out the reaction. Thereafter I will update the levels. As of now I am sticking with the same levels in the bank nifty. So again I am repeating, guys, I am just keeping bank nifty aside for few days. As I said, at least I need 1 day of ICICI results, and yes, ICICI results are also out, so I am giving myself time for at least next 1 or 2 days. Thereafter I directly again update the levels. Yes, I would update the levels, but personally I would be looking for trading in Nifty. So this is my personal trade plan. And yes guys, if you see 22 Jan today itself, it's a big day for Ramji, Ayodhya Mandir, and especially for all the Hindus, it's a very big day and auspicious day, and a lot of people also celebrating started Diwali today. And yes, and Jai Sri Ram to all the Hindu members of our community family, and Jai Sri Ram all you guys. And yes, this particular data we're going to discuss about is about devotional tourism. If you see, yes, we see the tourism, devotional tourism, we never include the profits or like business, we don't combine usually, and we see. But yes, stock market point of view, let's see some of the important data of temples and business around, just to get a clarity on this. Because see, Ramji Mandir in Ayodhya gonna to be a good business turnover. We're going to see very good business and economic boost as well to the country. So how that's going to happen, let's give a small intro in this video. If you want, I will make a dedicated video on that. But before that, let's only talk about devotees, like people, devotional tourists, like how many members visit top temples till now. I'm talking about till now. Let's talk about at least top 5 or 6 temples in this video, and thereafter we conclude with a statement. Okay, now let's see. In the first place, we have Tirumala Tirupati Devasthanam, which is in Andhra Pradesh, and average monthly we get 50,000 to 1 lakh members to visitors there, and average if you see yearly, it's almost near to 4 crores per year. And second place is Amritsar, which is in Punjab, and daily we get 70 to 90,000 members, and almost on yearly if you see near to 3 CR. And coming to third place is Siddhi Vinayaka Mandir, which is located in Mumbai, and almost we get 2.2 CR. On all these numbers are approx, like not absolute numbers, because as you all know that is also dynamic. And fourth place is Shirdi Sai Ji, and we have almost yearly if you see it's near to 2 crore. And coming to fifth place is Jagannath Puri, and almost the yearly we get 1 CR members or visitors or devotees, as you all know. Now the sixth number is very interesting, because Vaishnavi Devi Mandir, and especially if you see, this is a challenging place. It's not that easy to just get over, especially if you talk about past 2-3 years, then that is the definitely some sort of task. And even now we are seeing lot of developments there, so now it is coming little bit of easier. But yes, compared to all the temples, it is little bit of a task for especially senior citizens and members, because it's a hill area and weather also not supports. And even one who have visited, let me know in the comment section, because even the signal is like network is also a major concern there. So now still a part of all these challenges, we get 1 CR visitors per year in this Vaishnavi Devi Mandir. And coming to especially 7th place, we have Kashi Vishwanath Ji Mandir. And especially if you see, especially last few years, if you go back last 4 to 5 years back, the number is around 70,000. But especially if you see now, it is after some sort of development there, and especially now almost we are getting 7 CR members annual, like yearly we are getting this, and that is a tremendous growth. But now let's come to the main place, Ayodhya. And yes, the estimations till now, the estimations are, I'm talking about estimations, they are estimating 3 lakh members per day. And even if you average that, you can clearly average that, but according to the estimates of yearly, then that is near to 10 CR. And just guys, you just imagine when people or like devotees are going there, the visitors, the tourists are going to that places, everyone have their average spending ratio, right? Let's say some persons might spend 25,000, some might spend 50,000, some might spend lakhs, some might spend only thousands. And yes, this is what every individual have their individual spending capabilities or capacities. So just keep 1,000 as this average spending there in Ayodhya, then see the what is the business happening there. 10 crores into 1,000 rupees. So you can just imagine how big business that happens. So that will definitely boost our economy, that will boost the businesses over there, and all the livelihood there, like the people who are establishing business, they also start making profits. So now tell me guys, if you are interested on like devotional tourism places, especially what are the stocks gonna to get benefited, especially in Ayodhya Ramji Mandir. So we gonna to also make a dedicated video if you are interested. So let me know in the comment section. So I think already video length is big, but yes, remaining, if I want to update anything, I will update in the Telegram channel. So make sure, if you like my video or if you like my efforts at any part of the video, so make sure you like, subscribe and share this video to other friends and family members, one who trade as well. So hope you like this video, and which definitely boost our channel and also motivates me to make videos like this. So see you in the next video. Until then, this is Krishna signing off. Jai Hind.